Good day, everyone. My name is Michael Florentiades. I'm the Chief Economist here at XM.com, and I'm here today to present you the European Open briefing from Monday, March 6th. So, what is happening in the markets? There is some risk of mood because of expectations that the Fed is going to raise interest rates, some geopolitical worries. North Korea conducted some ballistic missile tests, and this led to the yen, the safe haven yen, gaining, and also there was a modest sell-off in stocks. Now, the US dollar and treasury yields did not get much of a boost from Yellen's hawkish speech on Friday, and the euro lost some ground on French election uncertainty. There is the possibility that Alain Juppé will replace Fillon, but this has been unresolved, so this creates some uncertainty as to who is going to be the conservative candidate, and this is obviously hurting the anti-Le Pen camp, because maybe it will be Macron, the centrist, that will face her off in the second round. Maybe there will be a more wounded conservative candidate, so this remains open. Now, on the calendar, we had Aussie retail sales meeting consensus, and later on today we have the Eurozone Centix investor sentiment, as well as US factory orders and the Fed's Neo Kashkari speaking. Now, we had the Fed's Janet Yellen and also the Vice President, the Chair, and Stanley Fischer, the Vice President, pointing to a March rate hike. The Fed officials seem to be singing from the same hymn sheet, so they are all presenting nearly identical arguments with respect to a rate hike in March. The next Fed meeting is on March 14-15th, but before that, we have Friday's non-farm payrolls, the all-important employment report. To quote Yellen, she said that further adjustment of the federal funds rate would likely be appropriate, and she also warned about a faster scale of adjustment compared to 2015-2016. So this is more or less setting up the environment for setting up the stage for 3 rate hikes this year. This is looking more possible. We also had in economics data, the services ISM, the ISM non-manufacturing, also coming in very strong for February, in line with the recent news that the survey data showing quite a robust economy. However, we did get some profit taking in the dollar index. You look at the drop in the dollar index on Friday, and there wasn't a lot of recovery from that. I think it's possible that the market has now fully priced the March rate hike, and we should look for fresh catalysts moving forward for the dollar to rally even more. So according to futures, market sees around 90% probability of a hike, so this is almost near certainty. Maybe also hurting the dollar is Trump's latest argument with Obama over possible wiretapping during the Trump's campaign. This is seen as offsetting as some of the more positive and some of the more consensus impressions that Trump was trying to form a consensus around his policy after his speech last week to Congress. And unfortunately, there are also few signs, unfortunately for the market, there are few signs that Trump's fiscal policy measures will be ready or will be implemented any time soon. Now, during today's Asian economic news, retail sales out of Australia for January met expectations as they came in at 0.4% month on month. As you can see from the chart, the yellow line is the actual retail sales number. The blue and purple are the estimates. So this was the first time after 2 months that retail sales met estimates. However, this did not help the Aussie much, as it was unable to get over 76 cents against the greenback. So the Aussie is remaining weak because of the strong US dollar. We have the risk-off mood and also concerns about security in Asia after North Korea's ballistic missile test. Commodities are also a little bit weak, with oil at 52.75 latest and gold at 12.32, so that's well off their recent highs. So this is showing commodities are also under a little pressure. To end with the calendar, as we said, we have a relatively quiet day. We have a Eurozone Centix Index as well as US factory orders later in the day. We also have the Fed's Neil Kashkari speaking, who is an archdove. I would characterize him very dovish, and it will be interesting to see if he echoes the relatively hawkish comments by Yellen, although I think this is, at this point, it's a little academic what the other Fed speakers are going to say, given what Yellen, Dudley, and Fischer said last week. And the week, of course, is going to pick up later with the RBA tomorrow, Reserve Bank of Australia, European Central Bank on Thursday, and of course, Friday's all-important US employment report. That's all for today. Thank you very much for watching and have a great day.